12 o'clock. I'm going to call this A. All right? I'm going to call this A as the A part of the day. Okay? And the A part of the day, is when I can expect a move. Okay? I can expect a move. Either up or down, but normally this is the best part of the day, which is the A part. So whether it be up or down doesn't matter to me. I just say it's a move. Next comes into the B part of the day. B part of the day is from 12 o'clock to 1400 to 1430. And the B part of the day steps in. So the A part of the day, I can always expect a move. Always. Always is a very hard term to say in trading, always. But for the most part, I would expect some type of direction up or down on the A. B part of the day, about 80% of the time, we're going to get what's called a range bound activity. Now, in the late 90s, traders used to say, and they still do, everybody goes to lunch, right? But Richard in the UK and the Australian clients here, they don't have lunch at midnight, right? Or at in the afternoon, right? They don't live in the New York Eastern Standard Time. So this B part of the day at 12 o'clock does not occur because everybody's having lunch. It occurs because everybody's already positioned themselves early in the morning, long or short. So it dries up. Everybody now is holding. So that's the reason why we have the middle part of the day, unless there's a news event or something else that's occurring, that seems pretty slow. So in the B part of the day, I can expect this. Now, B is the most important part of the day. B is the most important part of the day, and I'll tell you why. It dictates what happens in C. C is from 2:30 to 1600. This is the C part of the day from closing, and it's from 2 to 2:30. Okay, it's from 2 to 2:30. Now, at any point did we have a closing price above or below B? Nope. Right? Lots of wicks here, lots of wicks down here. C, the C part of the day, never was able to break out of B, the range of B, right? So therefore, if you're going to take a trade in the afternoon, which we have many opportunities, make sure that it's breaking outside of B, okay? It's called the ABC pattern. All right? So let's take a look at, everybody understand this? I'm going to show you some examples now, right? Let me show you what happened the day before. February 1st, we have here 9:30 to 12 o'clock. Remember, what can we expect out of the first part of the day? Anyone? A move, right? We can actually expect a move, right? What about from 12 to 2 to 2:30? B part of the day, what can we expect from the B part of the day, guys? Anyone? Sideways, most of the time. Most of the time, okay? Now remember, I believe that B is very important because it dictates how the day is going to end. Did C, part C of the day, do anything? Nope. Matched B without a doubt, right? So your best opportunities are going to be when it breaks above or below this. Okay? Make sure that we understand what's happening in the market. Okay? It just matched it. ABC. Let's take a look at another example. January 31st, let's say. I'm sorry, January 31st. We have here A to B. We have a move, right? I can expect that in A. What about B? 2 to 230. 2 to 230 right there. And went even higher, right? There's much more to this that I teach, but just so you guys understand, right? What about C? C do anything? Right, it didn't do anything. C stayed within the ranges of B. B, to me, is the most important part of the day. All right, because I know what to expect out of A. I know there's a move going to happen. But B will dictate what happens with C. All right, guys? So I'm not using moving averages, momentum, bands. I'm using price action to teach me and show me, and I'm following it. Okay? All right, guys? All right. Taking a look at what's happening here in the crude light. Let's take a quick look here. Remember I said to you, pullback here, short, reaffirm the trend, right? Going short there. How many bars do I give it? Anyone remember? Right, 4 to 5 bars for the trade to work in my favor. Right, guys? Very good. So I'm not going for the ATR in this trade. I'm just looking at it as a 1-point move or something fairly tight where I can get in and out. It's a pullback. Now, if I have 2 more green candles, right? If I have 2 more green candles, the first one that reaffirms the trend, it's telling me this, right? Now, the question is, was this entry short lower than my original that happened, double bar short from the Atlas line? So it coincided. It's telling me that the trade is safe to take. The problem comes when we have these green candles come and they pull back, let's say, and it goes all the way back up. Well, in this case, we would go long anyway, but above the Atlas line. But it's not showing you that it wants to go down. It's showing that it wants to go up. All right. Very, very nice. Good bunch of traders here in the room. I like to see that. Great questions. If there's a question that I missed, guys, because there's a lot of people here in the room that are asking questions, please just post them again. I'll be happy to answer them. All right. Let's take a look at the euro. Remember, I want to stay long or short the euro based on the Atlas line, right? What do you think? Do you guys think that this, we had here 1, 2, pull back? Is this short lower than this short? No. So this trade I would not take. Even though it worked out, it's not showing me, I'm sorry, this short would be here. It's not showing me this. It's showing me this. Up. Wants to go up. Okay? So even though the trade worked out, I would have skipped on that. Okay? Each entry into the market needs to be lower. Going short here, how many bars do you give it? 4 to 5, right? 1, 2, 3, 4 to 5. You're out of the market. Okay? Small loss, that's okay. If you realize that this was another pullback, you could have held it for another 4 to 5 bars, but if this kept on going, you're just ranging back and forth and doing nothing, then you need to understand that's what price is doing, right? If it's doing this, it's got to go lower, right? It's got to go lower.